A record bonus season couldn't save him from the decision that tanked his entire career. April 2023 looked like a miracle. JPMorgan had just reported record quarterly profits, nearly $8 billion, even while regional banks were collapsing around them. The bonus pool swelled to historic levels. Senior executives walked away with seven-figure checks, convinced they'd weathered every storm. The narrative was intoxicating. Inflation was cooling, the Fed might pause, and JPMorgan's fortress balance sheet meant they'd won. Nobody questioned whether one exceptional quarter meant the economy had actually stabilized. That confidence became quicksand. A single month of record earnings created the illusion of permanence, and that illusion made smart people make catastrophically stupid bets. Here's where the story gets brutal. This banker walked out of his April review with a bonus check that most people couldn't earn in 5 lifetimes. Instead of diversifying, paying down debt, or doing literally anything reasonable, he did what confident people do after one great quarter. He went all in. He took nearly his entire bonus, borrowed aggressively against it, and poured everything into commercial real estate. Not diversified CRE funds or rate. Direct exposure to office buildings and retail centers in major metros. His thesis was simple. If JPMorgan just posted record profits if the economy is supposedly humming, then real estate has nowhere to go but up. April's success felt permanent. It felt like proof. So he leveraged further, convinced himself this was the smart play that separated him from average savers. By late April, he was sitting on a massively concentrated position with borrowed money amplifying every move. Then came May. The CRE market started cracking. Office vacancy rates spiked. Interest rates stayed stubborn. Within weeks, his positions were underwater. The margin calls came fast and merciless. Before his firm even discovered what he'd done, his personal net worth had evaporated. That bonus that felt like invincibility in April became a weapon that destroyed him by May. Here's where the story shifts from hubris to catastrophe. Our banker walked into that performance review expecting congratulations. Instead, his manager handed him a printout. JPMorgan's compliance team had flagged unusual trading activity tied to his personal accounts, positions he'd taken without proper disclosure to the firm. The CRE bet wasn't just aggressive, it violated internal policy. But that wasn't even the worst part. While he was sitting in that conference room, his broker had already triggered margin calls. The commercial real estate market had started cracking. His leveraged positions, which looked brilliant in April, were now bleeding cash. By the time he left the building, his entire personal net worth had evaporated. We're talking millions gone in days. The broker didn't wait for permission or explanation. The math was simple. Collateral value dropped, margin requirements kicked in, and positions were liquidated automatically. He didn't lose his bonus over a bad quarter or miscalculation. He lost everything because he'd borrowed heavily against assets that were now worth a fraction of what they were weeks earlier. The performance review wasn't a reckoning about his job performance. It was the moment he learned his life had already collapsed before the meeting even started. What happened next was a cascade that nobody saw coming. Within 6 months, this guy went from untouchable to radioactive. JPMorgan's legal team filed suit against him for breach of fiduciary duty and unauthorized trading. They wanted their losses back, and they had documentation of every trade. The SEC opened an investigation into whether he'd used material non-public information to position himself before the collapse. Meanwhile, his personal net worth didn't just disappear, it went negative. The margin calls had taken everything: his house, his investment accounts, his retirement fund. He was staring at bankruptcy filings and a regulatory suspension that basically ended his banking career. Friends stopped returning calls. The guy who walked out of that April performance review feeling invincible was now defending himself in 3 separate legal proceedings. His family had to relocate. He took a job at a compliance firm for a fraction of his former salary, assuming they'd even hire him given the scandal. The cruel irony. He'd made the right call every single year before April 2023. 1 quarter of euphoria. 1 leveraged bet. That's all it took to erase 2 decades of careful wealth building. Pride didn't just precede the fall, it engineered it. Here's what nobody learns. A record bonus doesn't protect you from leverage and concentration risk. The best years often precede the worst decisions. This banker had everything: status, wealth, opportunity, and lost it all because he confused one exceptional quarter with permanent prosperity. The lesson is brutal but simple. April's record profits don't guarantee May's safety. Diversify, limit your leverage, and never bet your entire net worth on a single conviction. One good quarter should trigger caution, not confidence.